Thank you for visiting our video blog today on manufacturing and ERP systems. Today, we will be joined by Chris Haiss. Chris is a partner in our technology solutions group. Chris specializes in ERP systems, which cover the operational, sales, and accounting aspects of your business. My name is Kevin Connelly, and I am a CPA that works a lot with manufacturing on the accounting and tax side of things. And today, like I said, we're really going to be talking about ERP systems and how ERP systems and manufacturing and how they integrate and how you really need to be sure that you have the right system for your business. So with that, we're going to kind of keep it very casual, keep it very conversational. Chris, starting with the first question for you, what are some signs that a manufacturer might be ready for a more sophisticated ERP system?
What I see most when leads come to us is that they're having problems with scheduling, planning exactly what their demand's going to be, whether that scheduling is impacted by limitations of supply, like they might have a supplier that will only give them a certain number of items over a 6-month period, which is falling short of their actual customer demand. So scheduling, sales forecasting, material requirements planning, so that they make sure that they have everything that they need in time to be able to put promise dates on orders that are coming in, things that they need to manufacture, components they need to manufacture, and making sure that they're able to stick to their promise dates to their customers. So it's really that planning aspect. And also a sales product configurator. So let's say you have a sales team that's working, let's say, in Microsoft CRM or Salesforce, and not every product is the same. For instance, let's say you're ordering a Dell laptop. Everybody could configure that Dell laptop a little bit differently. You're not going to go to Dell's website and just pick the automatic configuration, or the default configuration that Dell gives you. You might need additional video or a larger hard drive, more memory, or so on. And that's considered a configuration of a particular product, so that when it goes into the manufacturing, into the work order process, that the exact components that are needed for that order get put in place. And the last thing is like complex bill of materials, or complex routings, work center routings. They've been doing things manually, or they're on an old system. They might be doing a lot of those things with just their staff, people that have that knowledge in their head, but it's not anywhere in a system, so that the system control the flow as opposed to the people controlling the flow.
Okay. Okay.
So you, Kevin, as a CPA working with manufacturing clients, what are some of the common shortfalls of the accounting system or processes that you see?
Yeah, I think they really all center around inventory and inventory management. Like, if you cannot get a good beginning and ending inventory, you're never going to know what your costs are. And that's the biggest challenge I see when I go out to do an audit or review, or even work with just systems consulting or on the accounting side with my clients, is they cannot track their inventory. And whether that just be tracking, raw materials, or just throughout the entire manufacturing process, raw materials, work in process to finished goods. And if you can't get a good, get a good inventory, and you can't get a good cost of goods, then how do you know what your pricing really is? And when it gets to audit time, and some of these issues, they kind of rear their ugly head during audit time, when we have to really delay the audit because we can't get a good inventory. We can't attest to the accuracy of the ending inventory. We can certainly attest to the units on hand, because we've done a physical inventory observation. But if we don't have good pricing, the inventory pricing isn't consistent with their accounting policy, then we really can't proceed with the audit in that regard. When you get to an audit, unfortunately, we do have to communicate internal control deficiencies that we've seen during the audit. And this could be, something like if it's really bad and it really impacts your P&L and your balance sheet, then it could be a material weakness that we'll have to disclose to governance. When it comes to ERP systems, or just accounting systems in general, the biggest issue that I see from an accounting standpoint is just not being able to track your inventory. And if you can't track your inventory, you can't run your business properly.
Sadly enough, a lot of clients have those inventory systems in place, but their personnel are just not properly trained on them or using their tools, their ERP tools correctly. Because even for inventory systems that we've implemented, That's the number one support that we have at year end, that, people are finally looking at reconciling their purchase orders, reconciling their inventory, and they're doing it last minute because they're getting prepared for the audit rather than doing that on a monthly basis so that everything is clean on a monthly basis. So totally hear where you're coming from.
And with that, during the audit, Chris, like what's never fun is when you're in February, March timeframe doing an audit, and you have to tell the people that are working in the plant that they need to stop what they're doing and help you get what you need to get the audit done. So,
yeah. And they don't want to stop because they got to fulfill customer demand. They got to focus on customer demand and getting product out the door. Totally understand. Yeah.
So you can see how all this ends up really impacting all aspects of the organization if you really cannot track your inventory.
And it really comes down to having a proper ERP system and making sure that you're reconciling it monthly, doing, spot inventory checks, you know what I mean? They're called cycle counts in the system, and making sure that things stay accurate and working on it piece by piece on a monthly basis, as opposed to just waiting till year end to try to clean it up for the auditors.
With that, Chris, you bring up a really good point. And because you just brought up, moving to an ERP system. So let's say a manufacturer is ready to upgrade their to an ERP system. What would you say? What is the number one piece of advice that you would have for them before they get started?
Feeding right off of what you said, personnel, right? First of all, if they're going to a new ERP, they have to very clearly communicate what their requirements are to the consulting team or the people that are going to be implementing the system, or even like hire a consultant in advance before which what they really should do, even before they go into the ERP selection process and demo process, is knowing exactly what they need and what they can actually internally handle doing. I always suggest, if it's a manufacturer that's done a lot of things manually and their people have all this knowledge in their head, and it might be an older workforce that have been working there for years that don't like change, you have to get everybody on board. And then you really have to approach it piecemeal, in my opinion, that you have to make sure that you have the basics solid. Like, the basics are your purchase order, inventory, sales order, your supply chain, and so on. In order to get that forecasting, the planning and the product configurator and, the sophisticated BOMs and routings and so on, that can take time. I'll give you an example. Had a client not too long ago that was already running a very successful ERP system, their inventory is accurate and so on. They wanted to tighten up their manufacturing process and get actual time, like track actual time on manufacturing orders as opposed to standard. That is a big people change. You know what I mean? Getting people to clock in and out what they're working on, as opposed to them just giving you, I spent 5 hours on this today, and having a standard associated with that can be something that simple that your people don't want to buy into. And if your people are not buying into it, it's not going to happen, unless, and no one wants to change your personnel. There's personnel shortages. So you really need that buy-in, and you need those requirements, and you need to be realistic with your expectations.
It almost sounds like the business owners and the CFOs, the people that are running the plant managers, it's almost a leadership task as well. If they're not able to communicate to the people that are running the plant why it's so important to track their hours the way that they're tracking them and enter their time clocking in and out the way that they're doing it, if they're not able to communicate to them so that they can get that buy-in, it's never going to work.
Right. Honestly, when I do an implementation, I would rather have the people actually performing the work to be key people within the implementation process, and not just the management level, because that's really the critical people, are the people that are actually running the processes and running the system, and doing all that data capture in the system. They're critical, and those people honestly know more of what's going on and what all the different little nuances of the business is, as opposed to supervisors, managers, and above. I hate to say it, but it's true. Same thing with the requirements gathering, when the executive team does all the requirements listing, and they think that they have it all buttoned down, it happens all the time. And, in implementations, that when you get the people that are actually doing the work, they're like, well, wait a second, you forgot this and you forgot that, so it's, you have to properly plan, and your resources have to be involved and have to buy into the whole process. So when you're performing this annual financial audit, right, how do these shortfalls rear their ugly head in other ways other than just inventory? Like, what other type of shortfalls are you coming across?
In my experience, when a business decides to convert from one accounting system to another, and Chris, if you're recommending to one of my manufacturers that they really upgrade from an older accounting system to a more comprehensive ERP system, what I see there is there's just a disconnect sometimes between the accounting staff and the people that are on the systems and IT side that are doing the implementation. There's really not there's not a lot of communication there.
Yep.
And when that happens, the accounting, the outputs that come out of the accounting system really just are garbage. It's garbage in, garbage out, like the old saying goes. So really it comes, aside from inventory, whenever there's a conversion going on, or whenever there's just a change from one system to another, there's going to be some growing pains there. And typically your first year, your second year are where those growing pains are felt the most. But it takes some people like yourself, Chris, that can come in there and really kind of consult and give them the advice, and give them that expertise that they may not have had before, so that they can really get on the right path.
Yeah. And it's funny because we're definitely, in the same ballpark, but on different ends, because the three most frequent requests that I get from CPAs at our firm, or even CPAs at other clients, since we do, ERP implementations for other CPA firms as well, where there's another CPA involved, is that purchase order, accrued purchases are totally wrong. That's a big cleanup area, probably the biggest cleanup area I have at the end of every single year. That, so a CPA will bring me a listing of, 100 different purchase orders that are still open, that are really not open. It's just that the person doing that function, the purchasing people that are doing that function, they're just not keeping it clean. That disconnect, and the accounting team doesn't really get involved until the end, again, when they're supposed to be producing this information for the auditor and making sure that the year-end financial statements are correct. And again, that purchase clearing account, or that accrued purchases, should be reconciled on a monthly basis, not on an annual basis. The inventory, like you pointed out, is also a biggie. And then the other thing is the WIP, right? Those are, so those are things that are critical on a monthly basis reconciliation. And I see a lot of accounting teams that are not reconciling those on a monthly basis, because I don't know, it's kind of a black hole to them, because someone else is doing the process. It's not payables, it's not receivables, it's actually something that the operational team does. I don't know where that disconnect is, but I see it as much as you do. So.
Well, that gets back to the control processes. And we were talking earlier about having to, maybe communicate to governance that you have material weaknesses or significant deficiencies in your internal control. And clearly, if your costing isn't right and your people aren't buying in, there's some internal control issues going on there.
Turnover is usually the critical point. New people come in, and even if you had the proper processes in place and you had the proper system in place, just turnover in itself can kill the whole system, the whole process. Because new people come in, they think they know what they're supposed to do, and they don't know, because they're applying some other system's flow to this new system, and they don't get proper training. And then, 6 months down the road, someone at a higher level realizes, wait a second, this person's not doing their job correctly, but then it's already too far gone. There's a lot of details that are in error. And then they I hate to say, they expect a consultant to magically fix it. So,
And again, that's where you come in. So, Chris, I know we've talked about this before on different clients, and we can really go on for hours on this topic. But I want to make sure that our viewers can reach out to you if they do have questions. I know that you do offer complimentary consultations. So if they want to reach you, how can they do that?
They can just email me at chaiss, at gma-cp.com. Also, our website has me there, or my phone number, 410-207-1091.
Okay, sounds good. And for those looking for me, again, my name is Kevin Connelly. You can also find me on Gross Mendelsohn's website. My email address, kconnelly@gma-cpa.com. So thank you all for viewing, and I hope you guys have a good rest of your day. Thanks, Chris.
Thanks, Kevin.